We're very, very bullish to the high time frame. Couldn't be any more bullish. Our institutions of today are really on like life support. They're on their way out. Everything is cyclical, right? Nothing lasts forever. I think it's going to be abundantly obvious. Out of chaos comes order. People are going to make money out of this situation. There's going to be solutions to the problems. At Defiancy, we want to be well positioned and capitalized into those positions. This is the replacement. This is clearly going to be a better model for internet-based systems. This is the replacement, one big piece of the failing institutions of our time. This is Andrew from Defiancy. So we decided that we want to reinforce some of the things we talked about in the last video, give you guys an update on some of the price action, and we really want to go deeper into really our thesis going forward into later parts of 2023 and into 2024. Interesting enough, as we're actually talking right now, as we're recording this, it looks like Bitcoin is actually making the move that we talked about in the last video. So we can actually kind of zoom in here and talk about some of this price action today. So if you're looking at the chart right now, we had some interesting things happen yesterday. So in the last video, just to kind of reiterate, we talked about how we weren't super bullish in the short term. We had some concerns with probably having some liquidation to the downside. Really just a healthy retracement from this big move we've had really since the beginning of the year. But we're very bullish on the high time frame. Well, it looks like our stance that the market wasn't going to break this 30K level the first time due to miners selling and a few other factors. The government also potentially selling during the year, which is going to kind of naturally push us down. And that's where we are right now. So this is a critical level actually where we're at, this roughly 27K level, because once you break below this, you probably are going to trigger some liquidations, but this is really what we want. So we're actually trying, we have bids really all the way below here, all the way to 25. We would actually prefer it to go to 23 if we can get that. I just don't believe that the market, I don't think some of the people who want in are going to wait for 23. They're probably going to be buying very aggressively if we break below here. Again, we're very bullish high time frame. If you didn't see the last video, let me just kind of reiterate a tad bit on that. I need to actually change our chart here to something a little bit more zoomed out. If we look at Bitcoin here, and I'm going to remove some of these drawings, we can see a clear pattern, okay? We talked a lot about this in the last video. I just want to go over it again for people that may not have seen that video. We're really on the cusp of the next bull market. I would say that we're actually in the early innings. That's my personal opinion. But as you can see here, after a big move up, so you had this ginormous move up. I don't think people realize how explosive Bitcoin has been in the past. But this was from 2011 roughly to the end of this bull market. If you would have bought at the beginning, you would have done over 37,000%. I can imagine most people probably didn't hold all the way through that. But after that enormous run, Bitcoin's actually the best performing asset of all time if you go back from its beginning to now, according to my research. This really shouldn't be a surprise given how cheap it was when it started and relatively, it was very unknown. But after this big expansion, you had this tremendous downtrend. Now, the way we're looking at it, you might say, well, that is not that big of a deal. Well, actually it was. If you were buying up here or something, or even here, that would have been pretty scary because it retraced about 86%, 85%. This is actually what you're going to see a pretty typical number for Bitcoin, around that number. So everybody thinks it's over. Assets down 85% from its all-time high. Goes into an accumulation phase, meaning it just gets kind of boring, slow and choppy. And out of nowhere, it breaks out and off to the races for another 9,000, almost 10,000%, right? I mean, these numbers are just ridiculous when you really think about it. But then it did it again, a big retrace, right? Everybody thinks it's over. I was very much involved by this time, and this was dramatic. I mean, this was like People were not happy about this, and people thought, you know, it was the end of crypto. Another 80% drawdown. Market bores everybody to sleep down here, rips, and then we actually had a little bit of a, what I would call a black swan right here. This was actually the COVID crash, but then it was off to the races, right? Well, we find ourselves in a, excuse me, I'm trying to get rid of these lines. We find ourselves in a very similar situation with this leg right here. Okay, ginormous move up. Each move is, you know, not going to be as big as the previous one, just because of just saturation. As markets get more liquid, as more, you know, as the market cap grows, you're going to have diminishing returns. But you still had an enormous. I mean, if you go from the bottom here all the way to the top, I mean, you're still talking, you know, 1,700% roughly. Actually, more than that, almost 2,000% if you go all the way to the top. That's a huge move, right? But then, you know, with these huge moves, you have a drawdown. Now, the interesting thing about this drawdown was it actually wasn't as significant as the previous. It was actually, it was less. And this is what you would expect out of a maturing asset class, that it's not going to give you the same dips each time. It still was pretty large, about 75%. Now, you need to think about what actually took us down 75%. If you were in crypto in 2022, you know exactly what happened. Just a ton of stuff. There were so many things that went wrong in 2022, and all it could get us was 70, you know, almost 80% down, which to me, you know, that's actually remarkable given what had happened in 2022. We lost the second largest exchange, was super integrated into all, like, you know, a lot of the hedge funds, trading firms. A lot of people got liquidated and got wrecked, quite frankly. And the more I think about it, I mean, the amount of things that happened to take us there, we're going to need a nuclear war. We're going to need something very, very dramatic, I think, to get us below this area after all of the things that happened. Luna collapse, 3AC, you know, liquidations, all of these things that actually took us down there. It's very hard to reproduce that. And once you go so far down to the pits of hell, you know, at some point there's just no more farther you can go. And I think we visited probably the worst place crypto could be in, and I actually find that very bullish that we actually went through that. All of the systems worked. Bitcoin never broke. DeFi never broke. Yes, you did have some issues with DeFi, but this was just liquidations, not actual protocols not working, not functioning. They functioned like they needed to. And we'll go a little bit more into DeFi later. But here we are, right? After this initial breakout, and we're getting a retracement, right? And I want to zoom in a little bit. I don't want to zoom in too far, but we're getting this initial retracement off this 30K level. And this is exactly what we want to see at DeFiancy, because we want to add a larger position down lower. We want to add more. And this is what I think a lot of the trading firms are going to be doing. How far do we go? Well, we don't, you know, we're not trying to say we have a crystal ball here, but we do know based off of some pretty reliable data points. I'll just pull up one here, if you can see my screen. This is liquidity. Now, to be fair, people can pull this liquidity at any time. But from my experience in these markets, when it comes to the spot side, it actually tends to be pretty accurate in terms of where you're going to end up going, or at least stopping at. I do not believe you're going to be able to break below 25K very easily. There are many reasons for that, but the main reason is it's very psychological, honestly. It took a very long time, you see, to actually break out of that level, which is right here, about 25K. I mean, it took us, from the first time we touched it to when we actually broke out, it took like 215 days roughly. Once you flip it, it becomes pretty strong support. Anyway, so we're not going to go too much into the chart here. We're expecting this to probably touch down somewhere in here. At least that's what we hope. Honestly, the lower the better, to be honest, because we want to buy this as cheap as possible, building our position. But it could extend all the way down to 23, in my opinion, or maybe even lower. Maybe it could even go lower. So, you know, we're defensive, and we're definitely not going to be silly and greedy during this time. We want to let price reach, our bids, let price meet us, if that makes any sense. We're not going to chase it or anything like that. But we're very, very bullish still to the high time frame. Couldn't be any more bullish, to be honest, at this point. So now that we got this out of the way, we're just going to kind of do these, update on the price action at the beginning of these videos. I want to get a little bit more into something interesting. And I'm going to start off by talking about this graph here. If my computer will let me grab it, here we go. So this is called a dimension of trust chart matrix, whatever you want to call it. And I thought this was very interesting when I saw this about a year ago. I think this is when this came out. This was a Mazzari report that they published. This actual data, this chart here was created by A16Z, which is it's like a big VC slash like hedge fund, I guess. And if you look at this graph here, what you will realize is that people in general do not trust the government. Okay, and they think that the government's very incompetent. You kind of know that, right? By when you talk to your friends and family, everybody realizes like they barely can keep the potholes filled in roads. It's very slow, arduous. The government, it kind of is not exactly trusted and is not exactly competent at what they do. I think that's a fair assessment. Obviously, some people would argue against that. But also the media, right? The media is especially as of late, most people don't trust the media, even Democrats and Republicans, and they don't view them as very competent. The interesting thing about business is people do typically view them as competent, at least much more competent than government, but they also don't view them as maybe that ethical, right? I think some people may not view the pharmaceutical industries now as very ethical, and you could extend that to big tech companies and all these kinds of things. So we don't have any institutions, and by the way, this NGO, I think this is like nonprofits, if I'm not mistaken there, which obviously they're probably more ethical, but they may not be that incentivized and maybe therefore not as competent at getting things done, right? According to this study they did. So we don't have any institution that is both seen as competent and ethical. This is where I think crypto, or really, let me just say this, blockchain technology as a digital infrastructure layer for the future internet is going to come into play. Something that you can trust, it's not controlled by a third party, completely decentralized and open source, and very efficient at and competent at what its purpose is. Whether that's facilitating transactions or even something like just communications, social media, right? Blockchain technology is a general purpose technology. And I don't think I think the average person is probably not aware of how damaged, or maybe people are becoming more aware of how damaged and really, I would say our institutions of today are really on like life support. They're on their way out. And it's a very interesting time we live in, because I'm not sure if any of you have heard of the fourth turning. And I want to talk a little bit about the fourth turning, because I think it just really, this book was written, I think, in like the 80s or something like that, or maybe the 90s. But it really just hits home with me on the times we live in and how we're really going through a cycle that has repeated itself throughout history, which is that, let me pull up another chart here, that hard times create strong men. You may have seen this. Strong men create good times, and good times create weak men. Weak men create hard times. So basically you have this cycle, right? Here's a great example. The last so right now we're approaching the end, the weak men create hard times of a 90-year cycle. Basically, each one of these phases, right? A generation is kind of predominantly involved in each one of these, but it takes 90 years. And after 90 years, everybody that was born here is gone, and they lose the wisdom that actually facilitates a prosperous society. And you just keep going through this like decline and rise of societies. And if you go back, you can go, like, this book is amazing, The Fourth Turning, but you can go back to like the Revolutionary War. That was at the start of one turning, and then you have the Civil War 90 years later, and then you have World War II 90 years later, and now we're at 90 years later today. Interesting that we're at the end of a 90-year cycle, the psychological cycle that seems to play out over history. And you can go back way throughout time. I think the Chinese actually came up with this little model. So I think this weak men create hard times thing, It makes a lot of sense. You're just seeing a lot of very bizarre things, and people are just, it seems like nothing is working. The banking systems are having problems. The education systems look like they're broken. The media, I mean, just everything, right? Well, what happens throughout history, right? What keeps happening throughout history is you have no system lasts. Everything breaks, whether governments, uh, uh, companies, everything is cyclical, right? Nothing lasts forever. And eventually, what happens to all the monarchies of the past and governments is they break, and the institutions around them, they collapse, and something replaces them. Or they just evolve somewhat, right? Well, I think that is where we are today, is the underlying infrastructure really right now, we're going to talk about the internet, is really just kind of pervasive, right? It's just taking over everything. And the internet is kind of like, we're in this new internet age. But the problem is we can't trust each other on the internet right now. You don't really know who is who on the internet. It's very centralized in many cases in terms of the applications you use. Well, blockchain technology is a decentralized new part of the internet that people haven't really wrapped their head around, specifically Ethereum. Okay. And I think it's going to be abundantly obvious as more of the institutions, whether it's the banking system, which we know is having tremendous problems right now, whether it's just it's just anything that right now that we use as society, I guess to live, I guess to govern ourselves, education system, media, all of these things are collapsing. No one trusts them anymore, and the internet, along with AI, is about to usher in a completely new age, a completely new way of living. And out of chaos comes order. This is what happens throughout history. Everything gets chaotic. You have wars, famine, blah, blah, blah. It looks crazy. It looks like the end of the world. And then out of the chaos comes into a new world. We usher in a new world order. And that is what is happening right now. Whether this is intentional or not, that's a whole nother conspiracy. And we can, we're not, that's not really the point of this conversation. The point of the conversation is people are going to make money out of this situation. There's going to be solutions to the problems. And at Defiancy, we want to be well positioned and capitalized into those positions that we think are the solutions. And one thing I want to mention before we kind of start to close this out and start to talk about, we're gonna finish this video off with DeFi stuff. I want to talk a little bit about this Chat GPT system. Excuse me, I'm going to drink a little bit of tea here. Chat GPT, if you don't know what it is, you probably should. It's an AI system. People call it a large language model. And there are many like it that are being developed and competitors and stuff like that. Google, I think, just released something today or this week. This is going to radically change society in ways that no one really can comprehend, I think, just because it's such a powerful technology. If you've used it, you know exactly what I'm talking about in terms of its competency to really automate a lot of things that we just couldn't do before. I'm not going to go too much into this, but one of the things I would like for people to do their own research on this, because we don't want to focus too much on AI. But one thing I want to mention about AI is that at some point, and we're almost there, these systems are basically going to be not controlled by humans. It's pretty clear that we don't understand them that well. Ask the AI scientists that built them, they'll even tell you they don't completely really understand sometimes how they function. And it's my opinion that eventually these AIs are going to be doing their own things. Now, it will be for people, obviously. They will be kind of agents of ours. But they're going to look at these institutions if they have any kind of comprehension. And I'm not trying to get philosophical here about whether they're sentient, conscious. That's not the point. But these systems are going to be native to the internet. And what do you think they're going to prefer? An old banking system that is completely, it's just so ridiculously poorly built compared to blockchain in terms of like monetary systems? Or is it going to choose blockchain to interact in terms of exchanging value? I think it's pretty obvious it's going to prefer a internet native currency and an internet native system in which is transaction value. I think there's going to be more AI using blockchain and Bitcoin and Ethereum than humans. I think there's going to be, billions, if not trillions, of these little agents that are going to be interacting with each other, doing things for other people, or maybe even for themselves at some point, independent of humans. That's a little bit maybe in the future, but I don't think people have really wrapped their heads around how synergistic blockchain technology and AI is going to be. We'll probably talk more about this later. One thing I want to talk about again before we close out, before we talk about DeFi, I thought this was kind of interesting. So Texas lawmakers, they voted to include the use of digital currencies in the state's Bill of Rights. This is pretty significant. We know that Florida has effectively banned a central bank digital currency as being used in the state of Florida. And you can see that Texas is very much aligned in their support of cryptocurrencies. This is great news, and I expect to see this in many other states. So let's finish off here with DeFi. So we're talking about all these broken institutions. We're going to focus on the financial system, which is having problems right now. This is the replacement. When I say this, all of these protocols, or some of them, I shouldn't say all of them, not all of them will necessarily be winners, but these are all decentralized protocols. Some are more decentralized than others that mimic or serve the purpose of existing financial primitives, whether that's exchanging, so like trading from one asset to another, or borrowing and lending, things like this, right? You can also earn yield, off of different assets like Lido. You can stake Ethereum and earn, a dividend effectively, right? Now, the reason why I really want to point this out is I don't think people have quite wrapped their head around how big DeFi already is. So at its peak, and this was back in 2021, it was at about around $165 billion. Right now, it's at about $46 billion total value locked, meaning the capital that's locked into these protocols. These protocols now have been battle tested. They've been through hell and back through 2022. I mean, just massive deleveraging, huge volatility, and we learned a lot about them. If they were going to break, they were going to break then, and they all worked. At least the big ones that people use. Okay, not to say that they didn't have issues, but they didn't collapse and break apart and all this kind of stuff, and then like basically be rendered useless forever and have to get a bailout from the Fed. That didn't happen. What happened was they just liquidated some of their users and they just kept going along. They didn't need a bailout. They just functioned because it's just code. There is no human to intervene and act emotional when it's just software. Now, that doesn't mean that you can't vote on these protocols. There are voting systems in here, which is good, governance to actually update it and all these kinds of things. But this is clearly going to be a better model for internet-based systems, which we are moving more into an interconnected world in terms of the internet. The internet is kind of like a new nation state, in my opinion. We can maybe go into that in another video. But we want to focus more on these DeFi protocols at DeFiancy. That was really one of our main intentions of starting this company, was educating people on these things and getting people involved. But I think this is DeFi. This is the replacement to one of the, one big piece of the failing institutions of our time, of our era, which is going to be the banks, which is going to be the banking system in general, central banks. And I'm not saying we're going to replace them. I just think we're going to have at the least a protocol swap, meaning the back ends of the banks, the back ends of the banking system in general, is going to adopt this technology over its very archaic at this point 1960s computer-based systems that are just ridiculously slow and inefficient and costly. Okay, well, I think that's all we're going to film today. We're going to be putting out a lot more videos actually, because I think price action, price action is very important, and really as we go forward, we're really gonna start to see some pretty dramatic moves in price action, and we want to really just keep people up to date. But we also want to keep people up to date with the long-term goal, right? And our reasons for having these views.